Ladies and gentlemen of the value investor space, of the crypto space. Because where else are you going to be a value investor nowadays? You're not going to do it in the equities market. You're sure as hell not going to do it in the bond market. Value, a company's cash flow, how well their business is actually executing. P&E, price to earnings of growth stocks, 30, 40, 50, 100, 1,000. Yeah, it's insanity. Value investing was never this. The value of a stock would go up if the earnings of a company went up, and it passed on those earnings as dividends to holders of the company's stock. And that doesn't exist in the same way it did historically. Yields are bottomed out. Tech equities give you jack shit, and even traditional value, energy, and REITs, and they don't pass along they pass along a significant portion of the revenue, meaning REITs are obligated as per statute to pass along the vast majority of their earnings, but they have a significant amount of capex for growth, expansion, human resources, so on and so forth, as well as the not the tendency, the status quo of companies to issue stock for purposes of capital raise. If you double the amount of stock, you're basically cutting the dividend per share in half. So that's what has happened. If a stock is producing 4% APR and it had 50% less shares, it's you have an increasingly likely chance of owning more shares at a cheaper price because or if there's more stock, you could buy it cheaper. The whole point is dilution significantly impacts the amount of capital available on a per share basis. If there's more shares, there's less capital per share that's available. So the dilution has caused less value to be able to flow to persons owning shares. And that is what happened to the equities market, and that is what will happen in many regards to a lot of crypto assets. But if they get share issuance, tokenomics right, a significant amount of value can be transmitted to holders that is more consistent with traditional value investing that has been long lost in the equities markets because of all the capital raised. This doesn't occur in the same way with very specific protocols in the crypto space, and clearly you have your crypto protocols that have token issuance in a very centralized or historic organizational type of way where they do inflate, and it's not really governed entirely by a DAO. There's no voting. So you have your companies, you have your crypto companies, but you also have your crypto protocols, which is the heart and soul of what DeFi was supposed to be. Decentralized, where the people vote, a DAO, and it's immutable and it cannot be altered unless a vote goes through and those votes interact with the chain and those chains influence and the votes influence parameters of the protocol that don't require human intervention. The owners of the tokens vote to mutate the protocol. The contracts are immutable, but the protocol's configuration is mutable. So there's a lot of protocols that do this. One of the first to actually do it quite interestingly was 1inch, and they've gone off in a very centralized corporate direction. That's besides the point. But they had mutable parameters that token holders were able to vote on. So those are the attributes that I look for. I'm a traditional value investor. In a time long, long ago, I would have been a dividend investor. I would have had fun probably in the 30, 40, 50, 60, 70s up until the dilution of the currency started to really take root, and then everything changed, and everything just debt expanded, and everything got diluted to such an extreme that the cost per dollar per week equation became basically useless, which has resulted in the vast majority of market actors chasing growth, chasing appreciation of an asset, not necessarily for fundamental reasons that traditionally were attributes of a quality value instrument. Social media, hype, uh, just a variety of other what are ultimately really trivial reasons for the price of an asset, be it a stock or a crypto, to go up. FOMO. People are buying, so they're going to buy, and that jumps the price, and that the price going up gets more people to buy. I can't stand trivial reasons to allocate capital. This is not a game. And everything we've talked about on this stream over the last 2 years is to treat this professionally with respect, have some dignity. And we definitely really hone in on traditional value investment ideology here. Cost per dollar per week. Now, obviously, uh, what comes to mind is the sustainability, the survivability, and the moat, and how likely it is for that cost per dollar per week to either maintain with slight variability and hopefully increase into the future as more consumers consume the protocol. And that's what we want. Those are the attributes we find, and there's a lot. And what happens is there's new protocols, there's old entrenched protocols that have history, and those are the ones that I happen to focus on. I every once in a while dabble with something new. I do see what everyone's looking at on Discord. I do see what everyone's looking at on social media. But you have the risk associated with the new protocol, the integrity of the contracts, and ultimate intentions, which you really have a very clear sense of for DeFi 1.0 assets. Things that existed back in mid 2019 started to take root end of 2019 and really caught fire Q1 2020. And clearly, if they're still around from those couple of years ago, they have survivability. And that is what's most important. If you have a capacity to create the equation, cost per dollar per week, and it has a minimized risk profile because it existed for a long period of time, so it has lindiness. The longer a protocol exists, the more likely it is to continue to exist. It has a relatively large degree of survivability. Gazika, it's all good. Late stream it is, but it'll be here when you get to it. And I'm very picky with regard to adding assets to the portfolio. I get tempted. I see a large percent yield. I see an LP position that's cranking out 400%, or I see an LP position that is relatively of interesting composition. Let's say Ethereum paired with something else that's cranking out 100%, or Ethereum. And I get tempted, but there's volatility associated with it, and it's liquidatable. So you have to deal with other market actors that might say they want to liquidate, which drives down. Well, actually, liquidation of an LP position would drive up the yield as there's less liquidity in the LP. But these are calculations and volatility that I don't want to engage with. I don't want to have to think about what other market actors are necessarily going to do. The equation I like is if a protocol is making revenue, it's cash flow positive, and it pays its holders enough to encourage them not to liquidate. And in that condition, it's not just about capital gains. It's about my equation, cost per dollar per week, and other people are going to be aligned with that. So you're going to have a different degree of volatility, a different set of actors purchasing and selling the tokens because they operate with different rules as compared to Dogecoin. I mean, is anyone buying Dogecoin for the revenue? There is no revenue. Is anyone buying Bitcoin for the revenue? There is no revenue. It's not an enterprise. It's not an operation. There's no cash flow. So, that being said, I look at the crypto space in terms of enterprise, actual business that has a product that people engage with, users, and those users doing things, inputting work, creates profits, and those profits are given to me and the other participants. And that is the core attribute I look for in crypto protocols. And what I like to see is it growing? Or is there a bear market and is it sustainable? And does it have a high degree of survivability? And that is how the core portfolio is constructed. That's exactly why we talk about Curve so much. That's why we picked up a VBAL position. That's why I picked up a VLR position. I wish I had more, but I don't. It's okay. The most recent addition is Synthetics, and obviously OP, the Optimism token, is incentivizing activity on the chain or on the rollup, and there's a great deal of liquidity flowing in. And this is basically Optimism summer, as you can see, with the type of yields that are getting thrown around. 15% on Aave. I mean, this is about a day or so into the launch of incentives, and what happens is you're able to fold these into cash and carry trades and make a fair amount just on stablecoins. I mean, this was up at 15%. 20% at launch. Obviously, a huge amount of liquidity has flown in. There's $1.64 billion already. This reminds me, it has all the overtones of what happened on Polygon when incentives flowed over there. That was a fun period of time. So I'm getting nostalgic of that episode that I engaged with, and as well as a lot of folks on the Discord forum. So we're playing this differently. At least I am. I felt that Synthetics was a good addition to the portfolio for sort of characteristics of survivability, characteristics of lendiness. It's highly profitable. There's at times it is more profitable than the Bitcoin network, the amount of transaction fee revenue that is produced, that is distributed to miners. So it is. That's something that Kane talks about. He touts the Synthetics is one of the largest revenue producing protocols in the crypto space, and that is the case, especially that it facilitates very efficient transactions because of its synthetic assets, and it has overtones of GMX with Quenta. Where's Quenta? So Quenta requires basically SUSD and synthetics, and you could trade. So the entry the entry point to the Synthetics network is SNX to mint SUSD. With SUSD, you can get synthetic assets as well as just deposit SUSD, and that's your stablecoin. And that's how you're able to interact with this entire perpetual exchange. Basically, a good part GMX. This the historic implementation of it. A lot of the tokenomics of GMX are sourced from the way Synthetics did things. But because of OP Summer, Synthetics is paying very meaningfully, especially on Optimism. Ethereum, it's a little less on mainnet, but it's 75% on Optimism. Was encouraging enough for me to take the position size. I did. It took about 100 grand position. The SUSD I don't leverage. SUSD I opted for Aave in good part, but I did place some on Velodrome. Get some of these tokens. This it's like $10 a day, give or take. 229 Velo. Got about 55 grand worth of SUSD. So I did move some stable coins over. I don't know how long this position is going to last. I'm not too interested in Velo. Take a look at the chart real quick. Obviously, the solidly fork. Obviously the yields are much less, which means they probably fixed the tokenomics in some regard. I would hope so, because obviously Solidly was a complete failure. Let's see how the chart looks for it. I mean, if this holds up, if we don't see the break to lower low, at least if we see support at 6 cents, which is basically its launch price, then I'd be encouraged to probably keep the LP position and let the Velo just appreciate and compound over time. Maybe I'll even vote lock it. The whole point really of keeping cash on Optimism is a capacity to potentially get entry prices on Synthetics, as well as manage the collateralization ratio. I got to make sure it's over 415. I probably only need $10,000 worth of SUSD available at any time to burn to re-up the collateralization ratio. About 25 grand worth of debt, 400%. That makes sense. And this is the only new addition, and it pays. And then that's the calculation there. This is consistent with everything I talked about in the introduction to the stream today. It has history, DeFi 1.0. It has lendiness. It has a bit of a federation, such as Quenta, which consumes its synthetic assets. It has cash flow. It's cash flow positive. It distributes it, disintermediates its enterprise cash flow, and it's decentralized. There's governance. So it has all the characteristics that I would look for in a potential position. Very hard for me to take a position nowadays. Have I been looking at anything else? Not really. I'm tempted for always more aura, but aura bow. But the price point, I'm not going to buy at this price point. Now, it's not a bad technical setup. This is basically a large inverse head and shoulders followed by a smaller inverse head and shoulders. In some regards, maybe it's a W bottom. Is it a W bottom, being that's the entirety of the history of the chart, more or less? Maybe it's a triangular formation. This is a large triangle. Um, but I'm not going to take a position at this price. I'm unfortunately biased because of my entry price. The entry price was 66 cents. So it's not something that I'm entertaining much at the moment. I'd rather keep the cash and the optionality and the choice. You can never let your cash position get too small because then you lose the capacity to make choices. And if you lose the capacity to make choices, we have nothing left. You need to be able to make choices, and you can't do that unless you have cash. So cash flow contributes to that. Obviously, VL Aura as well as VE Bow, you should probably consider the Warden. Um, it's limited, but I really like where they're heading, and it's going to take some time for them to likely, hopefully, grow, to have more protocols. Use it to facilitate voting incentives as compared to directly using hidden hand. But you can get a sense of the amount of revenue cost per dollar per week that you receive. Obviously, Aura is bi-weekly, but VE Bow is weekly. So you can do your direct calculations, cost per dollar per week, that you would have to spend in order to purchase a salary. Now, I look forward to this. 5 days left, but I would love to see 20, 30 cents per VE Bow, given that they're relatively expensive. VE Bow is much more expensive than VL Aura. So these are definitely some of the key considerations, especially at these relatively high prices. Now, it was, someone mentioned on social media, I was talking about, the prices crashed in the vast majority of the crypto space, and a lot of things, a huge swath of the crypto space is up 1, 2, 3, 4, 500%. And then someone will be like, oh, yeah, we're down 90% from all-time highs. I could care less where we are from all-time highs. I care much more about where we are from the lows. And a rally at 500% is a meaningful situation for persons to liquidate that are playing ups and downs, and they're trading volatility, and they're more focused on capital gains. So I'm not too excited about purchase prices across the entirety of the crypto space. I think everything is expensive given how much appreciation has occurred in the last couple of weeks, since at least last week of June, maybe third week of June as well. The only other thing I did pick up was I doubled my position in Stargate. So if you look at the Stargate token price, this thing is basically still bottomed. It's not significantly. You don't have your 3, 4, 500% rallies like you've had with other assets. And Stargate as a technology is quite meaningful. It's not necessarily a revenue producer. So I myself size my position not as a revenue position. It's not a capital gains position. I'm not too interested in liquidating it unless it has like 1,000x on the money. That's another story. But clearly, with only 33 to 42 is like a 10, 15, 20%, 25% appreciation. It's not like you're missing a discount. This is at the discounted price. It could go lower, but it didn't go higher. So it's not like you're buying at $1.50, where it's 2, 4, 8, 12, almost 400% off the bottom. So you're not buying a 400% appreciated asset. This is still at the discounted price. So that's the risk calculation there. It doesn't produce revenue, so it's not cost per dollar per week type of calculation, but it has the potential to be, and the total addressable market, the TAM for it, is the entire market. So it's quite interesting. It's something that's on my eye, but I sized the position relatively small, being that it's not a productive asset. Joshua's in the house, live from Dallas on the road. Keep it up, buddy. Always can do better. Stream's gotten sparse over the last couple of weeks. Looks like a lot of the momentum is out of the crypto space. There's not a lot of excitement, but this is everything. This is the excitement. The Q4 2019. It's not now necessarily. Can't say this is like the end of the bearish cycle. But if you weren't hitting crypto hard in Q4 2019, you missed March of 2020. You missed hundreds and hundreds and hundreds of percent gains. There is no exiting capital management. There is no exiting a market that has such tremendous opportunity. It's such an extraordinary technology that these developers have built, and the synergy between protocols and the manifestation of monetary policy, and pretty much you got yield curves at this point. These extraordinary federations have emerged. It's just, I know a lot of folks are disheartened. Maybe they made poor financial decisions. Capital, they're underwater. But man, this is the market to dominate. It really is. Um, Unless you guys have questions, it's a light stream today. I know it's late also. What else could I talk about? Obviously, we could go over the charts real quick. Curve looks good. Buck 41. Nice support at this range. Look at all these lines, all these values down here. Let's go out to the weekly, get a better sense. Higher low, 54 cents. Where it bottomed at 32 cents back in its initial hyperinflationary decay. Break to the upside of this trend that started in January of this year. It's the top of the depreciation highs. So that's good to see. A breach to the upside, as well as the top it all off. A break to the upside, a retest of support for the last 2 weeks. So 2 weeks of support on the breakout. And now we just need the higher high, and that would be the trifecta of bullish confluence. Um, Overall, I like the position. It's significantly appreciated. This is a perfect example of something that's a highly coveted position in the portfolio. But look where it's at, 54 cents compared to a buck 40. It's almost up 200%. So it's not at a discount. It's not at a cheap price. Should be paying a premium to take a position at this point. Don't talk about the highs. Don't kill yourself over the highs. Talk about the lows. So there's no opportunity in my books for additional position, unfortunately. And maybe even fortunately, because I don't think I would add to it. Maybe another 10% more, but it's significantly oversized at this point because of just how darn productive it is. Cost per dollar per week. It is the premier productive asset in the crypto space with regard to survivability, the federation, and the lendiness. So that ultimately screams why it's the core of the portfolio. Now, Aura is, well, VE BAU, especially if the warden picks up more VE BAU, incentivized voting, it's extremely productive. That's cranking at 83% with D2D incentives being thrown around. Now, I'd love to see that. If I see more warden activity for VE BAU, um, I'd be inclined to take a position because it is still at a modest discount. It's not, I mean, it's up a little less than 100%, 80% give or take. So it's palatable. It's higher lows. I'd love to see a capitulation to the downside, probably about 4.75, $5, 5.10, something like that. Somewhere around this line right here, about 5.15. And that would be a decent opportunity, but it's not consistently productive. VE BAU on hidden hand is not too consistent, and it's very expensive per VE BAU. You can buy a lot of BAU at that price point, but the conversion of BAU to VE BAU is not a one-to-one because it's paired with Ethereum. So it is relatively expensive, the cost per dollar per week. So you need a significant discount on BAL to be able to scale up the dollar per week part of that calculation. Um, what else? Synthetics chart looks good too. Synthetics had a nice rip yesterday, broke out above these trend lines. I'd love to see it hold at least the bottom trend line. I'd love to see it hold the 50 SMA. It's holding above the TWAP on the 4-hour. I'd like to see a higher high print here. We did have a higher high print compared to August 2nd, so 3 days. I'd love to see the higher high against the 28th of July, but otherwise this situation looks very nice. Not for adding a position necessarily. Most of my position is lower, let's say about 305. I do have a little bit. I took it about 380, 390. So that's hovering at about entry for 30% of the position, because I do have a good feeling about this trend structure. Can it go lower? Sure. But in the meantime, it's highly productive, and it will continue to be productive basically in perpetuity, given the survivability and the linearness of the protocol that has been created thus far. Couple questions. Hey, sir, turning in a bit late, catching before the holiday. Hey, Tapsy, always a pleasure. You catch the beginning of the stream. It's all good. It's all good. Optimism and Arbitrum got some TVL because of Nomad Bridge hack and an appreciation in price with Optimism due to incentives. Could this be an L2 year, sir? Yeah, it's exactly what we saw on Polygon. The amount of incentives that are thrown around will drive in a meaningful amount of capital, especially with the OP incentives on Aave. Aave just that's the bank. Aave is a bank. So that's why I see $1.8 billion. If there's $1.8 billion on Aave, what are folks going to be doing with it? They're going to be speculating. They're going to be doing cash and carries. They're going to be borrowing at 5% rates, and they're going to be trying to outperform the 5% rate. You get 10%, 15, 20%, or maybe you play some capital gains. You play around on Quanta. But that's exactly what I want to hear with regard to synthetics. You play around on Quanta, we're getting transaction fees. You're playing around with basically anything, synthetics is getting some sort of transaction fee on the Optimism rollup, even Curve for that matter. Curve is one of the first to integrate synthetics as a facilitator of low slippage trades. So on Optimism, in fact, synthetics was one of the first to even tinker around with Optimism, and they were the first to deploy, so there was a lot of experimentation. I'm inclined to think Optimism got most of their feedback from the synthetics deployment. You providing any liquidity to pools on Curve is just staking for governance token. Yeah, it's too much opportunity cost. You need to be a very large whale to be able to capitalize on mainnet Curve. Let's go over to Convex and see what the yields are looking like. Stake. Yeah, I wouldn't do the double volatile pairs. I very rarely do LPing of double volatile pairs like Curve F 20%. I'm getting more on Curve, so I'm just going to stick with Curve. CVX CRV 21%. I get more with Curve incentivized voting, so I'm not interested in that. Stake DAO FXS 37%. So Frax share is cool. I'd probably be doing a derivative, a Frax derivative, if I didn't have the historic VEFXS position. That's locked for 4 years, and I just lock it in perpetuity. I treat it like a VCRV position. But CVX Ethereum, 44%. That's cool to see. CVX pays less than that. So that's one thing on my radar for potential liquidation in November. I think I potentially exit my CVX position, maybe even to just cash. It's not as lucrative as it once was. It's incredibly diluted. VECRV pays more than VLCVX, so it's not something that I'm entirely attached to. Now, bear in mind these vote locks and of 4 months. That is not something I'm too much of a fan of. It's a liquidatable position, and I'm much more liking to the 4-year vote lock with the decaying voting power, and that creates basically a purchase, because nobody's going to hold for 4 years and let their voting power basically decay to zero. That makes absolutely no sense. So it's a purchase, and I like the concept of a purchase that is 100% alignment with the protocol, and that creates a different type of market actor that I appreciate that perspective as compared to the capitalist that just wants capital gains and the scavenger who just waits for it to appreciate and takes the money of people that bought after them. So I'm tempted. Well, suffice it to say, I'm tempted to potentially reallocate the capital there. What else we got? Hilda's in the house, a pleasure. S. Ferbs, good. A good Shabbat's cap. Yes, indeedy. Love your streams. It's a pleasure. It's a Friday. I'm going to be off next week, guys. I'm very sorry. Whole week. And I'm not going to be on Discord. I'm going to be incognito. I'm going to be relaxing, unplugging, refreshing, clearing my mind. But I'll have some good stuff when I get back. Gambero, what's your view on macro with regards to crypto? Let's take a look at the most important couple of charts. Dollar ripped this morning. That's why we're seeing weakness across the crypto space. But dollar got stopped out at around a buck oh 06, which is not really a higher high compared to August 3rd, about 2 days ago. Let's zoom out a little bit to the weekly and get some perspective. So obviously we had this massive trend hit. Two hits on resistance. My gut says that we could potentially have a break, 108, 108.50. Even up to a double top, but unless we have some significant distress in foreign currencies, I don't see any sustained presentation in this chart indicating a break of a rising wedge to the upside. I see a higher likelihood that we have a cycle of dollar depreciation, maybe depreciation to a buck oh 03, maybe depreciation to 98, which gives foreign currencies a cycle of appreciation. I think foreign currencies are running out of steam. Monetary policy is a hot mess outside the U.S., and at some point, the dollar just goes vertical and risk assets get crushed, and basically Brent Johnson territory. So, all in all, it takes a long time for these macro cycles and trends to play out, but I think the dollar breaks lower over the next couple of weeks, months, 103, 3 points on the DXY over the next quarter, next 3 months. Doesn't seem unreasonable. A breach below the TWAP, and then it breaks back up, maybe towards the end of the year, or maybe Q1 of 2023. And unless something structurally changes with regard to U.S. Fiscal, or even foreign fiscal, ECB or Japan, would we see a significant break to the upside? If the ECB does significant yield curve control, we could have a significant devaluation of the euro, in which case the odds are this thing's going to break to the upside. So there's a relative reality for the dollar. This chart is relative to euro and yen, but there's also what it means from a liquidity standpoint. As the dollar rips to the upside, which isn't entirely expressed only in this chart, that puts a big lid on the available liquidity outside of the U.S. to do anything with risk assets. Most of the time when there is a dollar rip, that means outside of the U.S., people are buying dollars because they're servicing dollar debts, which means they're probably selling everything and anything they could find to raise dollars so they could manage their debts. That's why the dollar is a great way to get a sense of buy pressure on markets. If you see a significant dollar depreciation, for example, January 2017 to April 2018 and March of 2020, to December of 2020, these were your bull cycles, the last two bullish cycles in the crypto space, significant dollar depreciations. I mean, come on, it was crazy back then in August of 17. It was crazy in October of 20. And if you see a big leg down, that's where you get your appreciation of risk assets that takes the pressure off dollar debt servicing outside the U.S. and frees up a large amount of liquidity that gets spread around to search for yield in the risk markets. Kingmaker, a pleasure. Crypto bets. Zoidberg's in the house. Hey, Captain, I'm ready to select my bribe for CVX. How do I determine who will pay the highest yield? Do you have any tools? Yeah, the Llama. You got to go to the Llama. Go over to Vodium. 24. So Curves, Convex has its bribes up. Optimism and XDAI as well. So this will tell you what's paying the most. Obviously, it's still low. You're talking about 3 cents. Hopefully, it gets up to 10 cents this session, but it's been pretty low the last couple of biweeklies. It's been at 6.8 and 7.8 and 5.9. I miss the days of 44 cents, 56 cents. I think it got up to 80 cents in one of these. 36, 14, 44 cents. I was paying back then. Those were nice bi-weeklies. So we're down in the dumps. So it's not the most productive as compared to the way it used to be. So that gives the sentiment that I was discussing when we were looking at convex. But there we go. This is how you find what pays the most. It'll be on average because Vodium spreads it around. I tend to vote for things that make the most sense, like Frax base pools, Frax BPs, and I think that is allocating my voting rights to something meaningful. And it's nice that I'm getting compensated for it. It might not be literally the most. I might not be squeezing a tenth of a penny out of it that I could, but that's okay. So this is how you handle your convex voting. The voting for Curve is not incredibly lucrative from a convex perspective nowadays. You're actually getting more bang for the buck from Curve over on the old school VE token finance as well as CRV.finance. This is where you get the big bang for the buck. If you go over to StakeDAO, lockers.stakeDAO.org/bribes, they give you a good presentation of how much you're getting paid out for your Curve votes. CVX FXS is paying out about a penny per VE curve, and Curvath is paying a half a penny. Really? I might have to adjust my vote if this ever loads. The Vodium interface is a little bit more efficient as compared to this old school interface, but I'm not going to complain about 5, 6, or whatever this translates to in dollar form on a weekly basis. So that's the deal. Convex and Curve are really the core of sustainability, of lendiness, of positive weekly cash flow. Aura is doing very nice. I like to see what Warden's doing. Synthetics, I have my eye on. I think Optimism has a great significance to the overall crypto space. Arbitrum and Optimism with regard to rollups. Wave Vitalik talks about them. I very much look forward to the merge. Not interested in Bitcoin and Ethereum. I'm interested in the cash on these systems increasing, and I want to own access to this intermediate cash flow cost per dollar per week is the calculation. Crypto bets late stream. What's for lunch? I had a pho soup, Vietnamese soup. It's very nice. Good lunch today. Thank you all. I appreciate it. I'll be off next week. Enjoy your weekend. It's Friday, August 5th at 1:19 p.m. As always, tell everyone to subscribe. We can help everyone if they actually want to be helped, and we could always do better. You know the deal. After party on Discord for the most rational community in the entire crypto space. As I said, you have a wonderful weekend, and I will catch you guys next time. Peace.